As gold and silver continue to move upward, let's take a look at what happened in the economy this week. Before we begin, remember to like this video and subscribe for more economic updates. On Monday, the Institute for Supply Management Manufacturing PMI came in at a reading of 50.3, outperforming the 48.5 that had been projected and landing in expansion territory for the first time since September 2022. Also on Monday, S&P Global announced the final reading of its manufacturing PMI for March came in at 51.9. That's a drop by 0.3 of a point from February, but still the third month in a row the metric landed on the expansion side of 50. Both the Institute for Supply Management and S&P Global also reported their Services Purchasing Managers Indexes for March this week. ISM Services PMI came in a little lower than projected, landing at 51.4 instead of the 52.5 economists were expecting. Still, it was the 15th straight month the metric was above 50, which indicates expansion in the economy services sector. According to the data, job openings in February rose by a modest 8,000 to 8.756 million from a downwardly revised 8.748 million in January. The ratio of job openings to every unemployed person dropped to 1.36 in February from 1.4 in January. The JOLTS report also revealed that the number of workers who quit their jobs in February rose by 38,000 to 3.48 million. Other labor market data out this week included ADP's National Employment Report for March, which noted a sizable pickup in private sector jobs last month. The report showed a gain of 184,000 jobs in March, sharply higher than the upwardly revised 155,000 jobs added in February and the 150,000 jobs projected by economists. Finally this week, the Census Bureau reported a surprise decline in construction spending for the month of February, thanks to a weakness in non-residential and public projects. Heading into the week, economists expected to see that construction spending overall increased by 1.1% in February. Instead, it fell by 0.3%, largely on declines by 0.9 of a point in non-residential construction and a 1.2% decline in public construction. On a brighter note, residential construction was up 0.7 of a point in February, another sign of improvement in the housing market. Additionally, it's worth noting that on a year-over-year basis, total construction spending was up a healthy 10.7%. That's all for now. We're excited to join you again next week to continue to look at what's happening in the economy and the gold and silver markets. This is Devlin Steele for Augusta Precious Metals, signing out.